What if I told you as a business owner, there was a tax hack right under your nose? I want to talk about the best tax hack for business owners, and this is a way you could save possibly tens of thousands, even hundreds of thousands of dollars in taxes by just doing this one thing. And the hack is the 199 cap A deduction. And what is that? The 199A qualified business deduction, also known as the pass-through deduction, allows owners of pass-through businesses such as sole proprietorships, partnerships, S corporations, and certain trusts and estates to deduct up to 20% of their qualified business income from their taxable income. So how do you qualify? That's what I want to talk about next. Well, to qualify for the 199 cap A deduction, the business must be considered a qualified trade or business, which generally includes any trade or business other than a specified service, trade, or business, SSTB. We'll talk about that a little later. SSTBs include any trade or business where the main service is tied to the reputation or skill or one or more of its employees. Now, you can still get the deduction as an SSTB if you make a low income, but if you make a high income, you don't get that kind of a deduction. One other nuance here is think about a chef. You might think, well, a chef is an SSTB, but a chef's restaurant with his or her name on it is not an SSTB. So it gets a little tricky. Let's go a little more into that. Besides the chef example, here's some other examples of SSTBs. This could be healthcare, like a doctor, law, accounting, actuarial science, brokerage services, performing arts, consulting, athletics, and financial services. So if you're an SSTB and you make too much money, you're out of luck. But if you make too much money and you're not an SSTB, there's still ways for you to get the benefit. So whether you're one of those types of businesses or not, how do you know if you meet the income threshold? Well, the deduction is subject to a phase-out threshold based on the business owner's taxable income and the type of business activity. The phase-out threshold begins at $364,200 for married filing jointly and $182,100 for single filers. You're completely phased out at $464,200 and $232,100 if you're single. If you phase out and you're over that level and you're an SSTB, you're out of luck. But what if you're over that level and there's still a way to qualify? There is, and I'm going to tell you about that next. So what if your income puts you in the middle or over that threshold? But there's things that you can do, and really what I'm talking about is strategize your perfect tax plan. So for example, if you can get below those thresholds, either by starting a retirement plan or giving to charity or prepaying business expenses, then you can qualify for that 20% deduction. In addition to that, what if you have an S corporation? Because once you're over those higher thresholds, it's a W-2 wage test or a W-2 wage and property test. Most of you would qualify for the W-2 wage test, which is 50% of your W-2 wages to qualify for the QBI deduction. So I'll just give you an example. Let's say you have a business and it does $2 million of qualified business income. You're the only employee. Right now you have no W-2 wages except what you pay yourself. So how much should you pay yourself to qualify for the QBI? Well, it's 50% of the W-2 wages or 20% of the qualified business income. How much should that be? The actual magic number is pay yourself $571,000. If you pay yourself $571,000, you're maximizing the QBI deduction, which in that case would be 50% of the W-2 wages or $285,000. If you get a $285,000 deduction at a 40% tax rate, that just put $114,000 into your pocket. Now you want to check with your CPA to make sure that $571,000 is a reasonable income to pay yourself depending on the business that you run. I'll leave you with a magic equation. Your qualified business income, the W-2 wages should be 28.57% of that amount, and that's how you maximize your QBI deduction. So at any rate, think about how to strategize, use 199 cap A to reduce your taxes and have the most benefit as a pass-through business. I hope you found this helpful, and I look forward to seeing you on the next one.